Let's actually talk about the big transaction, big M&A deal, which closed out 2025. Coforge's acquisition of Encora, which is a Silicon Valley-based AI native software engineering firm. It's a massive deal, valued at about $2.35 billion US. This marks the largest overseas acquisition by an Indian mid-tier IT company. The role of private equity players, Advent and Warburg, who were the primary sellers of Encora, is also interesting. Unlike a typical cash-out exit, the PE owners have agreed to an all-stock deal. Basically, they're rolling over their entire investment into Coforge. They will collectively, post the completion of the transaction, hold approximately 20 to 21 or so % of Coforge's expanded share capital. So with that short preamble, let me bring in, Coforge's man, Sudhir Singh. Needs no introduction. He's been a leader at Coforge and created significant value over the last few years for shareholders. Shweta Jalan is managing partner. Shweta Jalan is managing partner at Advent International. Thank you both for joining us. Shweta, good to see you in the studios as well.
Thank you for having us.
Sudhir, wish you would have been here, but I know you're all over. You're traveling, closing out deals like this one. But this is a really large one, Sudhir, the largest yet for you, and as I said, perhaps in the industry in that space as well. Let me also, before I forget, wish both of you a very happy 2026. It's still early in the year, so you've got a lot of work on your hands to integrate this transaction, etc. Sudhir, let me start with you, right? You've done other acquisitions in the past, and I mean, most of those acquisitions have been hailed as successful acquisitions where you've managed to achieve operational efficiency, increase margins, etc., etc. Let's just start with the price, though, for this one, which many are pointing out. Many are saying that the transaction is pricey, Sudhir. 3.9 odd times EV by sales for an asset which is where organic growth, is about 7 to 8% over the last couple of years. The growth in this entity was between 15 to 16% in earlier years, but it slowed down recently. How do you explain this?
Well, we looked at the value. We looked at where the industry is heading, and we looked at where we want to be. Over the last 8.5 years, Coforge has delivered, has grown 5 times over where it was 8 years back. Our market cap has gone up almost 20 times over where it was 8 years back. When we look at where the next phase of growth is coming from, we need to look at where the industry is going to be. And this asset, from a value perspective, fits right in. We believe there's a new era of enterprise tech that is coming. We believe that the next generation of enterprises, business enterprises, they will have their business capabilities defined by a combination of human and agents, underpinned by a data core and cloud foundations that are purpose-built for AI. If we're not there, we will not be able to replicate performance on the lines of what we've delivered over the last 8 years. And as I said, we've grown 5 times. Our market cap has gone up almost 20 odd times. This is an asset that we very firmly believe offers the value, offers the synergy that will allow Coforge not just to keep growing over the next 1, 2, or 3 years as robustly as we have, but significantly beyond that time window as well. That's how we see it, Prashant. That's how I present it to you.
Yeah, no, absolutely. You must have looked around, right, Sudhir? Anything with AI native is expensive, especially in the US. I mean, nothing. Are we generally in a pricier environment? I mean, you would have been happy to pay less. I'm not sure Shweta would have been happy to take less.
Exactly.
I would have been happier to pay less, but in this case, we don't believe we overpaid by even a cent.
I see.
From our vantage, we've looked at just about anything that's been out there in the market over the last 2 or 3 years. When it comes to capability, when it comes to looking at an asset that was born in the Silicon Valley, which is where Encora was born, when we look at the capabilities, not just of Encora, but of the merged organizations, when we reflect on the fact that the 2 organizations will have a $2 billion data, cloud, and AI core.
Got it.
We think we're creating an asset that's, as I said earlier, it's not just a 2 or 3 year fantastic growth runway ahead of us. It's a multi-year runway. And it's the kind of runway that will hopefully allow Coforge over the next 5 to 10 years to define the archetype of the successful new era tech services firms.
Yeah, got it. Let me get in Shweta as well. Shweta, it's been a fantastic deal for you. I mean, I think you got in at about, what, $1.5 billion, right? Back in 2021.
Slightly shy of that, yeah. But
slightly shy of that.
Yeah.
And now, I mean, so you've done very well for your LPs, etc. So talk to us a little bit about, I mean, how do you see this transaction? But more importantly, for shareholders, there is this lock-in, right? The statutory lock-in, but also you agreed to
there's a structure that we've agreed.
I mean, about a year or so. So you're free to sell shares by June of 26.
Part of it, and then part of it there's more of a lock-in, yeah. We don't want to get into too much details around the transaction,
So could you talk to us a little bit about those commitments? Because I think from a stock market point of view, viewers would be interested, because you own a substantial share now in this. So come June, will we see some shares coming into the market, or, I mean, is that commitment is going to, I mean, till that time we have commitment, but what after that?
Wow. I wouldn't come on national television and tell you exactly when I'm selling any stock. But having said that, no. I mean, I think that was, you know, jokes aside. I would say, you know, from our standpoint, first of all, this is not an exit. I think that's the most important thing that you need to remember. Why have we done this transaction? Sudhir very, you know, articulated the whole synergy piece very well, right? We think these are extremely complementary assets, which once you put, you know, very classically 1 + 1, we think it should be maybe a 3, 4, or 5, right? So why would we otherwise not have taken cash and done the deal? We've taken stock as opposed to cash because we feel there's a genuine long-term value creation plan here. And that's what we expect Sudhir, you know, who's done a fantastic job with Coforge, to deliver for us, or from a combined entity basis as well. So I would say for us, this is really thinking about the value creation from here on, as opposed to think when I can just jump out of the boat and sell. That is absolutely not the intent.
This is the entity which has changed hands a few times, right, Shweta?
Well, we bought it in December 21. So for us, it's been 4 years.
But before that, I'm just saying, there have been multiple private equity owners.
Warburg Pincus was actually the largest owner. So we bought a large part from the Warburg Pincus and from the founder. And Warburg continued to hold a stub stake in the transaction even after they sold to us, right?
Okay.
So prior to that, I think they had smaller private equity investors.
So my question actually is for Sudhir. Sudhir, I mean, pardon me for asking, but I think it's a question on everyone's minds that, you know, you're known to sort of, you know, capture operational efficiencies, etc., from an asset that you acquire. Cignity, for example, is a recent one, right? But for an asset like this, a large asset like this, which has already gone through, you know, a few private equity owners, what can you do? I mean, margins here are already higher than where your margins are. What should investors expect you'll be able to do here in terms of making operations more efficient and gaining efficiencies out of the larger entity? Sudhir.
Well, if you look back at our record, this isn't in relative terms the largest acquisition that Coforge has done. About 4 years back, we acquired SLK Global, when we were a 12,000 people organization, and SLK Global came in with 7,000 people. And SLK Global, like Cignity, and like every other acquisition that we've done, has been extremely successful. Again, looking back at SLK Global itself, that asset, and we talked about this in the investor call, came in at an EBITDA of about 18% and now operates at almost 22+%. When we look at the combined synergies outside the $2 billion data cloud AI core that's being formed, please remember that there is a new vertical that gets added to Coforge, which is high tech, and the healthcare vertical jumps to being almost a $170-odd million vertical. Please recognize that LATAM, a geo that we've been trying to build nearshore presence in, is a geo that gets scaled up straight out to 3,100 plus, very strong AI native.
No, I know. But Sudhir, allow me to come in. Sorry. My only question is you gave that example of that acquisition margins went from this to this, right? But here margins are already 19%. So in that sense, there is no low-hanging fruit, or maybe there is. So where will this promised 200 basis point expansion in margins come from?
Straight out from the G&A itself. I mean, if you look at the SG&A of Encora, again, this was a conversation that happened on the investor call. That's 16%. Only 6% of that broadly is from sales. There's 10% on G&A.
Okay.
Given our track record, we think we can substantially cut that 10%. On the investor call, we offered 2% from a near-term perspective. That I believe very strongly, and we've said this in the investor call, we will deliver. Signity, if you remember, we went from 11 to 16% in one quarter, EBITDA. Out here, we've said 2% over the first year itself.
You know, the synergies aside, what the street was also worried about was the impact that it would have on your return ratios, because you spoke about the big acquisitions that you've done over the last 4 or 5 years. I'm looking at some data. You know, your return on capital employed on the business at large, which was over 30% a few years ago, is now down to about 20%. As these assets scale, you know, one would expect your ROC to go back, if not to historical levels, improve further. Can you provide us with a bit of a trend or an outlook here?
Absolutely. Coforge is a growth firm. Let's start from those basics. Coforge is a firm that's returned almost 20 times when it comes to valuation improvement over the last 8 years. We look at ROCE. We remain committed long term to making sure that the ROCE keeps climbing up from where we are today. But we look equally importantly at the total shareholder return. This is a growth firm. TSR is as important, if not more important, at the current stage of our growth journey. When you look back at our growth journey, again, and I say this, I suspect for the third time, a firm where the valuation has gone up almost 20 times over 8 years is an extraordinary story. TSR remains a primary area of focus for us. ROE is also an extremely important area of focus for us. It will come back to where it was over a period of time.
Okay, all right. You know, I want to talk about LATAM and the high-tech vertical as well. But tyranny of time on television, we have to take a quick commercial break right now. So Sudhir and Shweta, stay right here. We're going to take a very quick commercial break. Be right back with both of you. In conversation with Sudhir Singh of Coforge, Shweta Jalan of Advent International on the big transaction, which, as we said, closed out 2025. Now, Sudhir, thanks, and Shweta, thanks for staying on with us. You spoke about LATAM as a key area, right? Where you're trying, as you said, Sudhir, you're trying to build onshore presence, etc. Analysts at Kotak point out that this is I mean, first of all, the transaction itself is perhaps a little more complex because of its larger global footprint, which is Latin America, Eastern Europe, etc. And this entity itself has a history of unintegrated acquisitions. So if you'd like to respond to that, Sudhir, because this is also something which has come up.
Well, at the outset, let me say that the analysts at Kotak, and I've read that report, have a lot of very, very good things to say about the acquisition. You've taken one thread, so let me respond to that thread. Latin America, we are getting access to 3,100 exceptional AI native SMEs in the same time zone as US-based clients. From our vantage, these SMEs are going to be an asset just about any which way that we look at the piece of work that's come, the piece of work that we expect to get from here, and the work that needs to be done. When we looked at LATAM, we found that the management of Encora, particularly over the last 2 years, has done an exceptional job of integrating the disparate pieces that existed 2 to 3 years back. I give great credit to the leadership at Encora. I give great credit to them also because the entire LATAM structure delivery is now reporting into one global leader under whom the whole delivery organization is. So that impression might be somewhat dated, and I think that's only one thread out of a report which had extremely good things to say about the acquisition.
No, I completely agree with that. There's no doubt. But on that, are you worried about talent? Because at the end of the day, I mean, these companies are people, right? And the people that you have to execute, etc. Will they be? You'll bring a new leadership team, and as you said, I mean, to report to one entity now. Will there be a bit of a issue in retaining top-tier talent, Sudhir, or all that is sorted out? You've closed the loop there.
We don't anticipate any issue at all. This is something that's already been done over the last 2 years. It's not something that we need to do. So the entire structure reports into a leader who already exists, a leader who's going to continue with the combined firm on a go-forward basis. We expect absolutely no issues. And I can't reiterate this point enough. When we look at the two firms coming together, the revenue synergies, the cost synergies, and we repeated this in the investor call earlier also, from our vantage are incredibly strong.
Right. We'll ask you about the revenue synergies in just a bit. Cost synergies, you've spoken about SG&A coming in, immediate 2% that you've spoken about already. Shweta, I have to ask you this. You won't on national TV tell us what you're going to do with the stock. Understandable, right? But you're also a partner in this now. You hold stake in the company. So it is in your benefit for the company to grow. I'm sure your analysts have done some numbers. What kind of growth projections that, do those numbers throw up when it comes to synergies with being owned by Coforge?
So over and above what Sudhir articulated from a synergy standpoint, I think he's given some guidance from at least a bare minimum in terms of cost synergies that from the G&A side, believes that he'll be able to deliver, right? Over and above that, I mean, he said that a few times, but we do feel there'll be significant synergies both on the cost side and the revenue side.
Could you put a number to that? Because Sudhir obviously will speak about strategy, will speak about business,
You would appreciate we're also in the silent period, so we don't want to give any forward-looking guidance.
PE firms do a lot of number crunching.
I'm sure. Of course, we've done a lot of number crunching, and we genuinely believe, if you look at the verticals here, right, for example, the verticals that are strength of Encora versus strength of Coforge, right, it's actually very complementary. You spoke about LATAM a minute back, right? So we have Latin America delivery, Eastern European delivery. They were not present in Latin America, right? So that complementarity and the nearshore benefit that you get with LATAM will come into play, right? If you look at geographically, like, we are, largely West Coast, US based, right? And they had a much more of a skew towards the East Coast, and they had sort of a mix of US and Europe as well, right? So I think the complementarity is so, huge in both these assets.
Earlier the growth was mid-teens, a little over mid-teens, closer to high teens. Then it came down to high single digit. In your estimate,
For Encora and its standalone?
Yeah.
I mean, I would think about it more as a combined growth. And actually, prior to 2 years back, the growth was significantly more than mid-teens. Actually, it was more like, in the 30s, right? I think last 2 years, the macro has been softer, right? And it is, obviously it has AI, data and cloud, and the skew of the business has continuously moved towards enterprise, right? So, that growth has to be meaningfully superior to last 2 years is our anticipation.
So you've got seats on the board. Will you be a passive investor, active investor?
Aggressive investor.
Sudhir, do you want Shweta to be an active investor? A passive one? Question, but I mean, on a lighter note, Shweta, what do you plan to do?
I mean, we are not a mutual fund, right? So, I mean, the idea is not to be a completely passive investor, but, our underlying philosophy is to back strong management teams.
Yeah.
When you back someone like Sudhir, who's almost like an entrepreneur CEO, I honestly don't think that, we need to be, either hovering or interfering the business on a day-to-day basis. Yeah. But hopefully, if we have a role to play and a positive impact that we can make on the business, we'll certainly, both as an individual, but more as an institution, support the organization, till such time we are shareholders.
If it plays out, any other way, you can play this tape back to Shweta. I promise back to
And also, Sudhir, is that all for this year or the next couple of years, or maybe you're still watching out for some capabilities that you can acquire over and above what you have done already?
We're always going to be open. The one thing that we've always said is, post this acquisition, any future acquisition or whatever we've done in the past, the intent always has to be to make sure that the acquisition has never been EPS diluted. The intent has always also been to make sure that our standing as the firm that has delivered industry-leading growth, post-acquisition stays intact. We said this last week when we announced the acquisition on the revenue side, that we treat the fact that we are industry leaders in growth as something that we are understandably proud of. We believe that the revenue synergies that we see with the two organizations coming together will allow us to maintain that standing and hopefully on the margins improve on the growth that Coforge as a standalone has seen in the previous years.
Okay. Shweta, just last question. I know you gave us an answer, but it was not an answer. 50% in 6 months.
But you all don't give up.
In 12 months. You think you'll stay longer, or you will sell?
We'll stay. I'm sure we'll stay longer. I think there's a lot of value to be created out here.
Right. And so
that part I'm willing to say.
Your goal for 2026?
I'm sorry, can you repeat that, please?
Your goal for 2026? We have you on day 2 of the new year. And it's a business goal, obviously.
Sorry, my apologies, but I couldn't hear you again.
We just wanted you to wrap this conversation up with your priority or goal for 2026 when it comes to this acquisition and more.
Yeah, well, I mean, if I got the question right, you're asking me if there's anything else that's in the
No, we're just asking you for your immediate to-do list for this acquisition.
The immediate to-do list is to obviously get the regulatory approvals, make sure that we start engaging post receipt of regulatory approvals, and to make sure straight at the outset that the revenue synergies and the cost synergies that we talked about, and most importantly, the people integration that is going to be at the heart of it, are addressed with speed. So we'll wait for all approvals to come in, as we indicated last week, and then we're going to do the same number, follow the same boilerplate that we have with all the previous acquisitions.
Okay, all right, and I think the street looks forward to that, Sudhir. You've sounded confident over the years, and you've delivered and exceeded expectations, and we hope you do the same with this one as well. Thank you very much, Sudhir and Shweta, for joining us here on CNBC-TV18 on the second day of 2026. Happy New Year, and wish both of you and your teams a wonderful year ahead. Thank you.
Thank you.